Welcome to Spiedel's California Minute. I'm your host, Catherine Zidane. This week we're talking about the new business personal property reporting requirement for owners of short-term rentals. We cover business personal property reporting in detail in Spiedel's analysis and explanation of California Tax's reference manual. You can pre-order the 2024 edition and download a full table of contents at caltax.com under Publications. Starting in 2024, owners of short-term rentals, such as rentals offered through a platform like Airbnb, will need to complete new Form BOE 571 STR short-term rental property statement to report business personal property. Unlike real property, business personal property generally is reappraised annually. Business owners file a business property statement each year detailing costs of all supplies, equipment, and fixtures at each location. Rental of all or a portion of a property, including a residential unit, means that the property owner is subject to business property tax assessment on furnishings, including furniture, appliances, equipment, and supplies used in the rental activity. Items like furniture, televisions, computers, bed frames, mattresses, tables, chairs, entertainment units, artwork, kitchen appliances, washing and drying machines, and any other property provided to renters as part of the rental activity are considered business personal property. If a taxpayer rents out their residence on a part-time basis or rents one room of their residence, they will still need to file Form 571 STR to report property within the rented room and any property in other rooms like the bathroom, kitchen, living room, or laundry room that the renter or guest is allowed to use. The form does not allow for prorated reporting. Tax professionals should send the form to their clients now or share it when they meet with the client for year-end tax planning. Then the client can begin to locate the required information for reporting, for example, the year acquired and the original cost of the items. Taxpayers will need to report this information even if the assets are old. If your client is renting out their home or part of their home and they receive this form, they are required to fill it out and return it. Failing to do so could result in large penalties if the county were to cross-check their filings against listings on platforms like Airbnb or VRBO. Penalties range from 10% for failing to timely file up to 75% for fraud or deliberate omission. Every business that owns taxable personal property other than a manufactured home having an aggregate cost of $100,000 or more for any assessment year is required to file a signed property statement with the county assessor. The assessor will apply a depreciation factor based on the property's economic life. Even if the owner knows that the property is valued at less than $100,000, it's still better to complete the form and send it in. If the property owner doesn't submit the form, the county assessor will make assumptions about the property's value that may far exceed the actual costs. The tax rate is usually a little more than 1% of the assessed value. Generally, using a rate of 1.2% will give a conservative estimate. For example, if the cost basis of your business assets is $150,000 and the depreciated assessed value is $120,000, your property taxes on your business assets will be about $1,440. Businesses with property below the threshold value are required to file only upon request of the county assessor, unless the property qualifies for direct billing. Direct billing may be used for smaller, established businesses whose aggregate property cost is under $100,000 and the value of which changes very little from year to year. These businesses may only have to file statements every 3 to 4 years. Form BOE 571 STR is sent to taxpayers by the county the property is located in and has to be submitted by May 7th to avoid penalties. When a taxpayer receives this form from the county, it's required to be completed if the property was still being rented as of 12 a.m. on January 1st, even if the property is no longer being rented out at the time they receive the form. Spiedel's California Tax Letter is a monthly newsletter plus a searchable online archive of back issues that keeps you ahead of California tax changes so they don't take you by surprise. Get details on a subscription and download a sample issue at caltax.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's California Minute.